It's another tough day for financials too. The XLF, we talked about this yesterday. That's the ETF that represents the financials. Yesterday it was down for 12 straight sessions. Today it added a 13th. It was the longest on record yesterday, so of course it's the longest on record now again. Bank stocks closing lower included Citi, Bank of America, and JP Morgan. Rough patch comes ahead of tomorrow's second round of stress test results, Mike, which you might think would be a positive catalyst. They're going to talk about, capital they're returning to shareholders. But then you had James Bullard this afternoon coming out and in an interview talking about how maybe the Fed shouldn't move too quickly.
Yeah, St. Louis Fed president. Well, I think that a little bit of that doubt is filtering into the market in terms of what the Fed should and will do. I don't think, again, it's a matter of the market not thinking that it can handle 2 more rate increases this year. But when you look at the financial stocks, it almost seems like there's 2 ways they can lose, which is one, the Fed keeps raising on the short end and the curve kind of gets squeezed a little bit more if long-term yields don't go up commensurately, or there's going to be fewer rate hikes or we're closer to the end of a cycle or neutral rate, and that's not great for them either. So I wouldn't extrapolate too much because, by the way, European financial stocks is really where the pain is. Deutsche Bank had another rough day. That's why it's the big global New York banks that have mostly been sagging. And
do you, Charlie, I feel like you've turned from a bank booster to a bank, I don't know, what's the opposite of that? But where do you fall now on these large financials?
Thanks for remembering that, Kelly. Yeah, these banks got expensive in February. The reason why they've had lousy performance is they got overpriced. Everybody was a crowded trade. Everybody thought higher interest rates were good for banks. That's a lot more complicated, as Mike just laid out. It's much more about the shape of the yield curve than absolute levels. And so banks were overpriced. You had regional banks getting close to 2 times book. That's a price that doesn't even really make sense many times in an M&A environment. And so they have come down, and now they're much more appropriately priced. But there's some financials doing very well. The alternative asset managers, our favorite KKR, is continuing to hit new highs. So there's some dispersion in financials.
Yeah, I know. Every time I hear KKR, I think about Babrinskoy. I just hear you, banging the drum. Yeah.
Thank you. They become a C Corp next Monday, and all of a sudden everybody will be able to own KKR, including the indexes, really for the first time ever.
Yeah, and I know that was a big part of your case, was to kind of look outside, the big guys, the big indexes for now. Kevin, what about on the financials just before we move on? How do you feel about the banks these days?
I'm favoring the regionals in the theme of small cap, mid cap being a safer place right now. Financials are getting whipsawed by 3 big factors, including tariff and trade war issues that you don't see in regional banks. They tend to be more tied to local economies. And frankly, when I look at my portfolio of private companies, they're having the best quarter they've ever had in the last 10 years. So domestic economy is very strong, hasn't been affected at all by these trade issues. At least I can see from cash flows. There's no slowdown. And regional banks service that sector of the economy. So in putting more money to work, I'm staying in the Russell 2000 on financials and finding some solace there. It's been less volatile, and they're performing well, and they're starting to increase their dividends even. It's great.
Yeah, we thought it was weird today, Kevin, that the Russell was down again. And this has kind of been a theme this week. Even though purportedly the market's worried about trade, the small caps are getting hit. So does that just tell you they're taking a break here? Because they had been at record highs.
You're right, but I think everything's getting hit by the whipsawing and around politics, including, but I added positions to my small cap, and I also put on some dollars into Asia, which has just been slammed. I don't think I've caught the bottom, but it's getting very attractive. I love it when there's blood in the streets and it's the end of the free world as we know it kind of conversation, when it takes down big indices like the Asian indices. Asia and Europe are starting to look very attractive on a value basis vis-a-vis the U.S. because we're fighting a dollar increase that's going to hurt the S&P, I think, in the quarters ahead. So new money into Asia, new money to Europe, and new money into small cap domestic.
Yeah, I know you're talking, metaphor. You don't really want, you don't love blood in the street, Kevin. That's, just in the market.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.